everybody. It's Ed Rosenberg, and this afternoon I am speaking to Michael Fleming from Sales Tax and More. Michael, how are you?
Very good, Ed. How about yourself?
Okay, I'm doing really good. And last video we did really made its rounds, and since then I think a lot has changed, and sales tax has been in the news a lot on sellers. So first of all, tell us please, what exactly is the new Supreme Court ruling?
Well, the new Supreme Court ruling has really caught the sales tax world by surprise and by e-commerce sellers. And what this ruling has done is basically thrown out 50 years of precedent. So up until this point, before a state could require you to collect its taxes, you have to have Nexus. And Nexus is just some sort of link or connection with the state. And for the 50 years, there's had to been some sort of physical component. Now, we all, constituted that physical component, but at least there was some protection there. Some agreed that inventory created it, some disagreed, but we had to have some sort of physical component. On Thursday, June 21st, the U.S. Supreme Court did away with the physical component. I mean, when they overturned National Bellis Hess and Quill, these are two cases that have to do with requiring a physical. So now just having a certain of sales into a state or a certain amount of transactions in a state can constitute a significant nexus and require a tax collection.
So does that mean now that they can go after you for sales that happened in the past?
No, on this type of nexus, it's just going to be going forward. However, anyone who's had inventory in a warehouse and who has not, believed that this could create nexus, the states always have believed it creates nexus. And the states right now are emboldened, and they are devoting more resources for e-commerce sellers. So if you've had inventory in a warehouse for the last 3, 4, 5, 6, 7 years, then yes, the states can come after that type of physical presence. Or a lot of wholesale companies, sometimes they start selling online, not realizing that operations can actually, if they've got brokers, whether they're employees or independent contractors around the country, they don't realize that those activities create nexus for the online activities. So they could be at risk. But on these new elements, this what we call economic nexus, when this link or connection is based solely on financial, whether it be a dollar amount or transactions, we call that economic nexus. State can't go back if that's your only connection with the state. And in a lot of states, that's what this is going to be. Now,
this economic nexus essentially means that if I do business with somebody in California, I have to pay the sales tax. I have to collect the sales tax.
If you pass certain thresholds, and California hasn't passed economic thresholds yet, but 17 states that have, and some aren't even effective today. Some of them go into effect on December 1st or on October 1st or on January 1st. There are a handful that went into effect on July 1st, like Vermont and Hawaii and Kentucky. So this is going to be fin over the next 30 to maybe even as long as 18 months, because some states have to get, their legislatures have to weigh in, and the legislatures have adjourned for the year. So that we've got to wait till January for them to start passing some of these rules. But there has to be some sort of threshold. So one sale is not going to trigger this threshold unless it's a sale for $100,000. Generally, most states, we believe, are going to mimic South Dakota. Right now, South Dakota is at $100,000 or 200 transactions. So if you have more than 200 transactions in California in your scenario, and that's the threshold that California comes up with, then yes, you would need to start collecting tax. Now, Ed, we've talked about this before. Just because a state says you should do something doesn't necessarily mean it makes good business sense to do it. For example, if you're selling $5 items and the state says that once you hit 200 items, transactions, you need to collect the tax, I say we've got to use common sense. That's only $1,000 in sales, and the tax on that, be better off waiting for the state to find you rather than going out and getting registered and trying to do everything that the state wants you to do. So just because the state says we should do something, we've got to use a common sense, and we've got to say, is this material? Would it cost me more to actually register and file returns than any tax plus penalty I would end up owing the state?
Right. The majority of sellers that I deal with are selling significantly more than the $100,000 per state. And I would also say the majority are only collecting sales tax in the place where they actually operate, like New York or New Jersey.
Mm-hmm.
So this changes a lot for them.
Yes. And again, this is going to be phased in slowly for the economic side. But a lot of these sellers, I'm assuming, have had inventory in these warehouses prior to this, if they're Amazon sellers. And those are the ones that have to act sooner than later, in my opinion. Others may have different stories, but the states believe that inventory can create nexus, and that's not gone. This new ruling from the Supreme Court didn't say that physical presence doesn't create nexus. They just said you don't need physical presence. So everything that created nexus up until this point, the states are still making those arguments. Only now it's worse because it's that much easier to have nexus.
So if California sends me a letter that I owe them $500,000, what do I do?
And this is why being proactive is so important. Once they find out who you are, there's not a whole lot you can do. And a lot of sellers have decided to do nothing. And that buys you some time. But depending on how much information the state has on you, if your Amazon name is the same as your legal business name, they've got a lot of information about you. So the more information they have, they keep coming and coming and coming. California, they're notorious for putting liens on customer account receivables. They're notorious for reaching across state lines and putting liens on bank accounts across state lines. So if you ignore them long enough and they have enough information about you, then they'll just do an estimated assessment. And the estimated numbers are always worse than the real numbers. And then they'll give you a certain amount to pay, time to pay. And if you don't pay, then they will go ahead and turn it over to collections, where they'll start going through all of these steps.
Wow. Can you declare bankruptcy?
Unfortunately not. When it comes to sales tax, there's personal responsibility. So even if you haven't collected the tax, even if you didn't know you were supposed to collect the tax, it doesn't stay with the bankruptcy. They will, or I don't say they will, they can pursue individuals, the owners of companies or the officers of companies, when there was not sales tax collected. So that's why I say it's good to get out in front of this. If you're already registered, when California sends one of those letters or when they call you up, you've just got to give them your sales tax number, and they usually go on to the next company. They're not putting on their detectives hats at that point. It's when you try to register after you get one of these letters, that's when you've red flagged in the system, and it's too late at that point. So although it's scary to me going forward, and at least stopping the bleeding is the best thing to do. What the states want you to do is enter into some sort of voluntary disclosure agreement, which right now California is going back to October 2012. Maybe you don't have inventory there then, but if you do, that's how far they're going to go back, which is almost 6 years at this point. Whereas if you say you're going to be selling your company in the next 2 years and you want a clean bill of health, if you go and ask California, say, hey, I want to do a voluntary disclosure agreement, they'll only go back 36 months to waive the penalty. Now, I'll say only 36 months to come up with 36 months worth of tax, but at least your books are clean, because whoever's purchasing it nowadays generally does due diligence, of which sales tax is a big part of that due diligence. They don't want to be acquiring someone else's problems, and a lot of people don't understand, because sales tax generally follows the assets. Even if you do a stock sale, just the assets of the company, they follow the assets. So whoever's purchasing that company has just purchased your problems. So that's why it's important, if you're going to be selling the company, to deal with this now, because if you find out it later on down the road, a lot of times these companies will slash their purchase offer, make you put money in a trust account, an escrow account, until it gets cleaned up. So it really can hurt any sale of a business. If you don't plan on selling your business, most companies are just getting registered on a going forward basis.
Right, but this that you said California can go back, that's just the inventory nexus, not the economic nexus, correct?
Right. They don't have an economic nexus yet. So we'll see what their thresholds are when it comes out. But they can't go backwards just on the economic nexus, because they don't even have an economic nexus for sales tax yet. They have an economic nexus for income tax, but that's $500,000, and that's a whole nother ball game. For income tax, we've had economic nexus since roughly 2006, but for sales tax, this is brand new. There's something else out there too we need to take a quick talk about very briefly, and that's notice and reporting requirements. And this is a different U.S. Supreme Court case. This is got to do with the Colorado case, where the Direct Marketing Association versus it spent 7 years in the court, went to the U.S. Supreme Court twice, and the U.S. Supreme Court said it's not a tax, so it can stand. The lower court decided in favor of Colorado, and Colorado implemented in 2017 in July. And what that basically means is that at much lower thresholds than this economic nexus, I mean, Washington, Pennsylvania, Oklahoma, they all have $10,000 thresholds. And what they say is, once you cross this threshold, you got to tell your customer that in a series of 3 to 4 notices, depending on the state, some are 3, some are 4, but you got to tell your customer you're not registered to collect tax, so they're responsible for remitting the tax directly to the state. Then at the end of the year, you have to turn over your customer list to the state. So number one, that's not great customer messaging. What the customer hears a lot of times is, you're not doing your job, so I've got to do it for you. And you're going to rat me out to the states, because some states make you even tell the customer you're going to turn over that information. It gets worse, because for each notice you miss, a state like Washington, it's a $20,000 minimum fine. I mean, it's absolutely ridiculous. These penalties are 10 times worse than sales tax. The penalties are 10 times worse than sales tax. This ever got through the Supreme Court, but unfortunately it looks like it's here for now. What the states want to do is make your life so miserable that you voluntarily collect the sales tax. And to me, voluntarily about this. I mean, this is outright extortion. If you don't do this, we're going to pretty much bankrupt you with all of these penalties, because you're not going to be able to jump through all of the hoops to meet all of these requirements. So there's an economic component of these, but they're not economic nexus. Follow a whole different set of rules, and we've got to look out for those, especially in these states where the thresholds are so low and the penalties are so high. I'll share with you, I've got a list of the states that currently have an economic nexus, so people can see what dates they become effective, what the thresholds are, but they can also look at these marketplace notice and recording requirements, so they can see what those thresholds are, what the penalties are, and what the requirements are, what each state wants them to do if they don't want to register for sales tax. And then you can make informed decisions. You do nothing. Maybe you go out and start being proactive. You start counting your transactions. You start looking at your sales per state. You look at who's effective, and then you decide how you want to move forward.
What do we tell sellers who wonder if international sellers have to do the same thing? Doesn't sound like an international seller will have to comply with any of these.
I disagree with that. It's harder to make an international seller comply, but I'll tell you a story about the state of Washington. I had a big Chinese seller give me a call. They had someone who was located in Canada, and they were contacted by the state of Washington. And that's when they contacted me after they had already talked to Washington. They didn't tell them who they were or anything. Washington didn't have a whole lot of information. They told me that the parent, to tell Washington that the parent company was in China, and good luck getting any money. Well, I relayed that message to the state of Washington. The state of Washington said, fine, if they don't want to cooperate, tell them this. Well, we're going to do an estimated assessment, which we already talked, that's worse. Then we're going to turn it over to collections, and we don't need to go to China. They've got money at Amazon. We'll just put a levy on any of the accounts receivable at Amazon. That's number one. And put a lien on any inventory in Amazon. Number three, we're going to go after any merchant accounts, any bank accounts, any World First or Payoneer accounts that we can find here in the U.S. And the states have a lot more power than just about anybody realizes. And then they said that we were going to pressure Amazon to terminate you as a seller. So I don't know if they would have gone through with all of these things. They certainly can. I've not seen them do it with an FBA seller yet, but they do it with companies from all industries and everything else. So if I can do it for a service provider, why can I not do it for FBA sellers? Never went that far. This seller actually happened to comply, and we're seeing more and more international sellers comply, because as other countries start cracking down on people and they see in the news here what's happening, they try to get ahead of this at this point. So, in general, FBA sellers as a whole aren't complying, very little, and the foreign sellers an even smaller percentage, but everybody's stepping forward. I mean, there's an argument for the foreign sellers that this is, foreign commerce, and the states can't tax foreign commerce. But I don't think that's going to stop the states right now. I think the states believe that these international sellers are subject, and they will start going after the international sellers greater, especially as, the sellers in their own states are saying, hey, this is creating an unfair advantage. That's my 2 cents. We'll see what does happen. But I'm doing a lot of international speaking right now. I'm working with Intuit in Australia. I'm working, with Payoneer, who's got 40,000, Chinese sellers, and altogether about 100,000 sellers that are located overseas. And we're all doing this education effort, particularly aimed at the international market, letting them know that this is a responsibility that they should take seriously.
So let's say you have a fairly large $5 million seller, and he wants to be compliant, but it seems like it's an incredible amount of bookkeeping work. Is there a company or a way to just say, here, even if here's a bunch of money, make me compliant?
If you're in the U.S., there's a couple of good solutions out there. There's a company out of New Zealand. It's called A2X Accounting, and Amazon reports aren't great. So to get the information out of Amazon into your or QuickBooks or whatever accounting platform you have, I recommend A2X. For the sales tax side, because they generally don't do sales tax, they're a Alaric trust file or tax jar that really will work with sellers and make sure that the returns get filed on time. They're going to be your most cost-effective solutions. And then you've got people like me out there who do the same type of thing. We're going to be at a little bit of a higher price point because, it's the difference between, using somebody to do your returns and use an accountant to do your returns. So lots of people who can make this as hands-off as possible. I know that trust file, this sounds like a big number, but for $3,000 a year, they'll do it all for you. And that's a pretty good price to have your returns filed, and they'll pull the information directly from Amazon or Shopify or eBay or whatever other platforms you're selling on, and TaxJar, similar programs. So I would encourage people to take a look at both of these, because to go out on your own, if you truly are going to be registered in 20, 30, 40 states, if you try to do this on your own, a state like California, you get a lot of transactions. That's an hour or two worth of work just by itself. So whether you're calling me or calling one of these companies, it's well worth your time and the dollars to have someone else do this and do it correctly.
Right. I know a lot of companies wouldn't mind paying more if they're getting more. So what would be the benefit of paying more to a company like you versus TaxJar?
Do you have very many international sellers, or?
Yes, sure.
Okay, so if you're an international seller, getting a U.S. bank account is tough sometimes. So if you're working with a tax jar or a trust file, they can't work with international sellers because they require that you have a U.S. bank account. They never touch the money. They're going to draft off of your bank account. Actually, the state is going to do it. They'll just give the state your banking information. With us, we set up a sub account, and the money comes in, and we hold it in that sub account. It doesn't come in directly from Amazon. We tell you, okay, here's how much we're going to need for the month, and then you send us the money in a lump sum, and then we turn around and file the returns in every state and make sure that the state gets paid on time. States are not very efficient, so even when you're looking at a confirmation that you've paid, the state will call up and say, hey, we never got your money, and someone's got to take care of that. So we call that notice management. We do all of the notice management, and you've got a live set of eyes on there, and when something doesn't look right, then we can address it before the returns are remitted. And if we're talking about larger sellers, that's important, because if you're running a lot of money through your sales tax accounts, even small problems can create bigger issues if you get audited. So that's what we try to do up front. Obviously, no one's going to be 100% in catching all of the errors, but with someone like me, and there's lots of us out there, those are some of the benefits.
Do you think there's any sense of sellers trying to fight anything with the Supreme Court decision or something like that?
Fighting the Supreme Court decision, I don't think you can do that. State finds you, you've got nothing to lose. Okay, so I don't think you're going to win, but you've got nothing to lose. If you don't try, then you're definitely not going to win. I think that you've got to be proactive. You get a lot of options if you're being proactive, rather than waiting for the state to find you. Then your options are very limited. But when that state does find you, then you've got to fight. I don't think Congress is going to weigh in. I think that they should. I think that this is really bad, but unfortunately, I mean, you've got the big business, the big retailers and the states and really the public on one side, and you've got, remote sellers, that includes telephone, catalog, not just e-commerce on the other side. And there's so much money, that's what gets politicians reelected. So much money and so many votes on the other side of the season. I just don't see it tipping enough for Congress to step in. That's the last time they stepped in. It's been 59 years. They passed a temporary law for income tax nexus in 1959, and they said, this is so confusing, we have to study it. Well, they've been studying it for 59 years, and we've got this antiquated temporary solution that's still in effect right now. So, some people say we have a do-nothing Congress now. On some issues, it's always been a do-nothing Congress. So, I mean, miracles do happen. If Congress does step in, then we have to hope that they do it in a way that actually makes things better rather than worse. I'm pretty negative on government solutions. I mean, let's just look at how they tried to fix healthcare, and in my opinion, they've actually made it worse rather than better. So I hope that it happens, but I'm not very optimistic that they'll get something that actually helps us. Amazon collecting the tax, that's another hope that a lot of sellers have. It's not happening overnight. It can't. So long as you have states like South Carolina saying that Amazon is responsible for the past exposure, Amazon can't afford to give in. So they're going to fight that tooth and nail. So just like it took years for Amazon to cut deals with states so they would collect the tax on their own sales, we think we're going to see the same thing for third-party sellers. It's going to take a good 3 to 5 years. And even then, it's not a cure-all. I mean, if we look at Washington, it's actually made things either more complicated or worse if you're not registered. Are you familiar with the business and occupation tax?
Yeah, that's what certain states, Amazon just took it up front, which others loved it.
Yeah, well, in Washington, there's two taxes on the sales tax return. There's the sales tax, which Amazon is collecting and turning into the state. But there's the business and occupation tax, which Amazon is not doing anything with at all. So the state of Washington says, even though Washington's collecting the sales tax, every seller needs to be registered in the state of Washington. And what you need to do is report 100% of your sales on this return. You figure out what the business and occupation tax is, and then you roll down to the sales tax. Again, you report 1% of your sales, and then you take a credit for the sales tax that Amazon has paid on your behalf. That doesn't simplify anything, in my eyes, for a seller. It's just made it more complicated. What's made it more dangerous is now the state of Washington has all of this information at their fingertips. They haven't asked for it yet, but written into their statutes, they can ask for it. And when they do, it's real easy to say, okay, who's been having sales tax remitted for them and is not paying the business and occupation tax. It's a real simple, test there. And then they'll come back not only after the business and occupation, but the past sales, because Washington is the most aggressive. They have they're still going after sellers for past liability. Amazon's only responsible going, and they have a 39% penalty. So it's more likely that if you're not registered, the state will find you. So, it's not always the answer that we're looking for. It still creates a lot of issues for sellers when Amazon starts collecting the tax.
All right, so one final question. What would you say is expected total cost of compliance for $1 million company?
Well, it depends on who you're going to be working with. Someone like me, I'm doing initial consultations for complimentary, so we can help you decide which states you want to get registered in now, which ones you can wait 6 months on. So we'll work out a plan so that instead of jumping in everywhere, you can get this layered in. When I'm doing registrations, I'm doing them for $49 each if you're a U.S. entity with U.S. ownership, and $75 each if you're a non-U.S. entity or a non-U.S. owner. So, you're doing 10 states, it's either $490 or $700. Not too bad. Then you got to talk about the returns. So if you go with a company like Avalara Trust File, you're looking at about $3,000 a year. If you're coming with a company like so we are substantially more. But with that also comes continuous consulting. So as states, add these new thresholds, we'll advise you, we'll help you get registered and everything else. So with some providers out there, it's going to be a little bit less. With some, it's going to be a little bit more, but somewhere between $3,000 to $8,000. I think for the returns is a good number. And I know a lot of companies are at $100 or more for registrations. With us at $49, even if you did all 45 states right now that have a sales tax plus DC, you're looking at roughly less than $2,300.
Right, so even a large company shouldn't be expected to pay more than, let's say, $10,000.
Depending on who you're working with. If you're going to be paying more than that, there may be a good reason why you're paying more than that. Maybe your business is very complicated and you just feel more comfortable with someone who's charging you more than that. But there are solutions out there that you will be able to find that are less than $10,000. And it's, by the way, Ed, this is something we need to pay attention to, but not panic. All right, this is, if all we're talking about is this economic nexus, it's going to be implemented slowly. We've got 3 or 4 states starting today, but the rest of them are going to be coming in. Every 2 weeks or so, we may see another state. So it's going to be spread out over time. It's going to be painful over the next 12 to 18 months. But nothing to panic about today. I would be more concerned if I have inventory out there. I'd want to get ahead of the curve before states really start looking for you. But nothing to really panic about. There's a path for everybody, no matter what your situation is, that we can help steer you forward.
Right, so somebody that had large FBA inventory in California, nothing really changed in this Supreme Court ruling except they're more emboldened.
Exactly. Yeah, we're gonna see them be more aggressive. So rather than just send out the letters like they've been doing, we think they're going to put on the full court press, whether that starts in 2 weeks or 6 months or whatever. We just think it's inevitable that it's going to be coming.
Right. Okay. That was really great, Scott. And you'll give me your contact and I'll put it underneath the video and we'll do this again. I really appreciate it. Thank you so much.
Okay. Thanks, Ed.
You got it. Bye.
Bye-bye.